We are in the middle of earnings season, and this means that the tech industry has been in the spotlight with a mixed set of earnings this week. And I've got James Bevan from CCLA here to join me for more on these US tech giants. Hello to you, James. What a week for the techs.
Fantastic.
Yeah, absolutely. Where should we start then? Alphabet?
I thought that they were actually a very good set of results. I think the company is demonstrating that it knows what to do with the other bets. Its core business continues relatively strong. I think that if there is any pullback in the share price, this would be an excellent long-term buying opportunity for a company that I suspect will be a dominant player in advertising, which is essentially now the business activity in which it's engaged for a very long time to come.
Yep. What about its competition with Facebook, though? It's got some fierce rivals in this sector.
Well, yeah, yes and no. It's a different approach that Facebook has. I mean, social media as a mechanism for driving people in and then trying to monetize footfall. It's a really different perspective than Alphabet, where the core business is that you and I go and look for things and then stuff drops out and hits us hard.
But Facebook's going that way.
Yes, it is, but there is room for both models, and I would say that if you look at the valuation of Alphabet, it is materially cheaper than that of Facebook. So there is an awful lot less baked in the cake in terms of the future outlook. And from my point of view, the real challenge for tech is not just thinking about which business models are likely to succeed, but at what price do you enter?
Okay, let's do Twitter next, because in some ways it's similar in terms of advertising.
I'm going to say it's almost polar opposite.
Okay.
To me, Twitter...
You're always right, so...
No. This is absolutely what makes a market, that two people have a different opinion.
And with the advertising, though?
Well, I worry that Twitter doesn't have the sort of framework that it is able to extract monetary value from its customer base. And I look at the people who use Twitter. I see relatively old people switching off because they think that 140 keystrokes really is not meaningless. If you have a reasonable number of followers, you are bombarded by nonsense a lot of the time. Young people, interestingly, are not switching on, preferring Snapchat and Instagram and other means of communicating, particularly sending more photographs rather than writing text. And it's against that backcloth, I do worry that Twitter is not going to be able to generate the sort of returns that the optimists anticipate will be achieved.
What should we do next? Amazon?
Amazon is a fantastic story. I look at the long-term growth profile. I think that the market's response was curmudgeonly. Amazon has said a long time ago that it fully intends to invest. It has to invest. It has to deliver more distribution capacity in order to be able to cope with the rising demand. The demand is continuing, I think, to positively surprise, and therefore we shouldn't expect net profits to be rising in the sort of trajectory that some analysts have been anticipating. I think that on a 10-year view, Amazon will do exceptionally well. The sort of markdowns in price that we see, therefore, to me, represent an opportunity to begin to build positions for those that were nervous the price was too high. Now, whether we get a further markdown as the indigestion of the last few days works through and people think about what they have seen, I don't know. So I wouldn't necessarily commit fully today in building a position, but I would take last night's markdown as an opportunity to begin a position if I hadn't got one already.
Okay, interesting. And Apple is my favourite, but they're not selling enough iPhones.
Well, they just can't get enough. And therein lies a different problem. I mean, it's all very well to say they haven't sold because people haven't wanted them. In iPhone's case, they just haven't managed to manufacture enough. But you know, they've been given a huge advantage from the problem with the Note 7 from Samsung. I mean, it was a great opportunity. And Apple, having had this really very fierce battle with Samsung about who owned what technology and which brand had greater value, now just has to be able to deliver the product to the market because it's very clear that people want it. I think the interesting news coming out of Apple is what they are trying to do to retake some of the PC market. And there, the industry perspective is that the products are pricey, but they're very good quality. And the expectation is that people will pay up and that Apple will make a relatively high margin return on these products. Okay.
You mentioned Samsung. Can we just pick you up on that one there?
Absolutely.
What do you think is going to happen to Samsung now? Because what a complete disaster.
Well, yes and no. I think that the problem is that the technology of batteries, as we know, very difficult. The actual volume of sales of Note 7 were not that great. So it's not as if the 7 itself has been put into the bad boy camp. However, it is clear that there is some brand damage, and I suspect that the next big news item for Samsung is going to be the rollout of this pharmaceuticals business, which will be taken to the market. And I think people will suddenly realise how many jewels are in the Samsung chest, and I think the interest will revive.
Okay. Well, it's certainly a bargain.
Well, I would say that it is exceptionally cheap and very good value, but you are going to have to take on board a lot of volatility, a lot of uncertainty, and the risk of the Korean won as a currency relative to either the dollar or the pound.
And just to conclude, James, if you were going to pick one of these techs to put into your portfolio now, which one would it be and why?
I would pick Alphabet because it has a proven model, it is delivering cash flow, and its valuation is relatively cheap.
OK. Awesome. Thank you very much indeed.
Thank you.
That's James Bevan there talking about those tech giants today, Alphabet, Apple, Twitter and Amazon.